Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 6, 2025, and we're diving into Air Lease's latest earnings report for the first quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Air Lease has had an interesting quarter, and I'm excited to break down the numbers and insights from their report.
Revenue and profitability overview. Let's start with the top line. Air Lease reported a revenue of $738.3 million for Q1 2025, which is an 11.3% increase from the previous year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by an increase in rental revenues, which rose by 5% to $645 million, thanks to the expansion of their fleet. Additionally, their aircraft sales, trading, and other revenues surged by 90% to $93 million, reflecting robust sales activity.
And how did this impact their profitability?
Air Lease's net income attributable to common stockholders skyrocketed to $364.8 million, up from $97.4 million last year. This was significantly boosted by a $332 million net benefit from insurance settlements related to their Russian fleet. Their adjusted EPS came in at $1.51, beating the forecast of $1.20 by a substantial margin.
Fleet expansion and strategic initiatives. Air Lease has been actively expanding its fleet. Can you tell us more about their recent activities in this area?
Absolutely. During the first quarter, Air Lease took delivery of 14 aircraft, representing over $800 million in investments, bringing their own fleet to 487 aircraft. They also sold 16 aircraft, generating $521 million in sales proceeds. This strategic expansion and turnover are crucial for maintaining their market position.
How well is their order book placed for the future?
They've placed 100% of their expected order book on long-term leases for deliveries through 2026 and 89% through 2027. This indicates strong demand and effective management of their leasing strategy.
Financial health and capital management. Let's shift focus to Air Lease's financial health. How are they managing their debt and liquidity?
Air Lease ended the quarter with $19.9 billion in debt financing, with a significant portion at fixed rates and unsecured. They maintain a strong liquidity position with $7.4 billion available. Notably, they increased their revolving credit facility to $8.2 billion, which provides them with ample financial flexibility.
And what about shareholder returns?
The board approved a quarterly cash dividend of 22 cents per share, reflecting their commitment to returning value to shareholders while maintaining a balanced capital allocation strategy.
CEO insights and future outlook. John, what insights did CEO John L. Plueger share about the company's performance and future outlook?
CEO John L. Plueger highlighted the strong quarter driven by fleet expansion and significant insurance settlements. He emphasized the robust global demand for aircraft leasing and trading, which positions Air Lease well for future growth. The company is optimistic about capital allocation opportunities given their achieved debt-to-equity ratio.
It sounds like Air Lease is on a solid path forward. Any final thoughts on their future prospects?
With the current market dynamics and their strategic initiatives, Air Lease is well positioned to capitalize on the ongoing demand in the aviation sector. Their focus on fleet management and financial prudence should continue to drive positive results.
Key takeaways. In summary, Air Lease has delivered a strong performance in Q1 2025 with impressive revenue growth and profitability. Their strategic fleet expansion and robust financial management are key highlights. Thank you, John, for your insights today.
Thank you for having me. It's been a pleasure discussing Air Lease's performance.
Thank you for watching Smart Stock Watch. If you found this analysis helpful, please like, share, and subscribe to our channel. We'd love to hear your thoughts on Air Lease's performance in the comments below. Until next time.